Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about FL India, a complete analysis of a company that is one of a kind listed on the exchanges and now, in my opinion, coming at attractive levels. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about FL India, here's a small request. Kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on these mediums, you can directly contact me on mail and get the WhatsApp membership. Now about the company. Established in 1994, FL provides online and mobile marketing solutions for companies, and their main segments involve mobile advertisements, fraud detection, programming ad platforms, audience intelligence, and many more. It is the only player of its kind, as I said, listed, and that's why it's commanding a premium. Currently, the market cap is around 16,500 crores or just below that. If you look at the numbers, then these are Q1 FY23 numbers, and look at the sales. The sales went up by nearly 100%, and profit jumped by 53%. Although this profit growth, although it seems good at 53%, but it was doing something like 70-80% earlier as profit growth. But even in a difficult environment, to come up with over 50% of profit growth is commendable. It's a zero debt company and low promoter but high institutional holding at 40% is there. So FIIs, DIIs are invested big time in here. A return on equity of around 28%, margins around 20% has declined from about 24-25% to 3 years back. So I think margins should come back over the next couple of years or so. If you look at the results at a glance, so margins are down 300 basis points year on year and up 200 basis points quarter on quarter. So as I explained, every quarter the margins are coming back to the levels of 2017-18 when it was trading at around 25-26% margin. So margins are down 500 basis points compared to June 19, but is becoming better. So I think over the next couple of years these should be rectified. Operating profits have consistently increased over the years. It's commendable performance in a very difficult business environment and in a very competitive market of mobile advertising, that FL is doing so well and is right now a leader in this space. So demand should pick up as global environment and domestic festive season picks up. Absolutely, through October to March demand should end up picking up big time. So hopefully this December quarter and March quarter will be big for this company as well, and the numbers are set to improve. So if you look at the revenue picture in the last 3 years, in 2019 it had a revenue of around 250 crores that has gone up to 1100 crores in FY22, and I think it's going to go up even further, closer to 13-1400 crores in FY23. Huge jump in profitability of 4x over the last 3 years. Huge jump in revenue of 4x over the last 3 years. If you look at profits as well, that has also escalated. So from around 50 crores, the profits are 215 crores. Again, a jump of 4 times, and the profits are increasing every quarter. And this year will be even better, the FY23 season. If you look at the margins, so as I explained, in 2019 margins overall was around 28%. It was similar in 2017, it was closer to 30%. Now the margins have dipped to around 20%, but I think the worst of the picture for the margins is over with the pandemic going away. I think the margins should improve dramatically in FY24. In FY23, I believe that they should stabilize, and from 2024 or financial year 24, things should be much better. We could go back to 25-26% margin in a couple of years. If you look at the sales segment wise breakup, then the major sales comes from 97% of the sales come from consumer platforms. So what they do is they look at or analyze analytically, they look at consumer platforms of mobile usage, and then mobile advertising is tracked around that. And so companies who advertise on mobile platforms, say on different kinds of OTT platforms, etc., they are given all the data and analysis, and through that they try to have their advertisements tailor made for each individual. So that's what majorly they do. So consumer centric platforms is what they really look at, and that is why they are commanding such a valuation that they are doing at the moment. So if we look at geographic performance in India, so basically they have 50-50% from India and rest of the world revenue coming from these two segments. In India, what they do is 105, what they did was 105 crores of sales, so that's a jump of around 30%, 29-30%. And the rest of the world, the sales jumped by around 300%. It was a 3x jump in sales there. In terms of margins have shrunk or similarly in both the cases by around 10%, and that is why the margins have come down sharply to around 20% from around 28% 2-3 years back. And if you look at geographic split, as I explained, from India and from the rest of the world, the split is 50-50. Half of their business comes from India and half comes from the part of the globe. In terms of important pointers, so strong profit growth seen in the last 3 years. The profits have jumped fourfold. Similarly, sales have jumped fourfold. So margins, in my opinion, may have just bottomed out. I believe that margins should come back to 25-26% in 18 months time, in 2-3 quarters. Uh, they should come back to 23-24%, and in 6-7 quarters they should be back to around 26%. Global economic pressure may dampen numbers for a while, but what is interesting to note is that there has been a lot of pressure with the European markets not doing well overall economically, and yet the company has come out with very strong numbers. So that is the thing, that is why the stock should end up doing better, because there are very few companies in this kind of business environment in Europe and US that they are doing well, and FL is one of them. Revenue contribution from top 10 customers is 43% in FY21 versus 65% in FY19. So that was data I got. So basically their reliance to top 10 customers are reducing, which is a good sign that they want to probably look at other customers as well, and probably reduce the risk of losing out a major chunk of their business by having just only 10 clients, etc. Product wise, in FY21, cost per converted user is around 87%, and non CPCU is 13%. So basically cost per converted user is getting you can say better, and the cost is reducing. That's pretty good. Revenue is 45% growth in FY21 versus FY20. So this is a very good CPCU revenue growth that we are seeing. A converted user are those that those who look at advertisements and then go on site and buy into them, or they get some, or eke out some revenue, the companies eke out some revenue from those users who watch something and then look at the ad, or probably get onto the platform and use the app and eventually buy the product. So these are the converted users that we are talking about at the moment. So after looking at major points for the company, let's look at how the valuations pan out and whether we can probably start accumulating at these levels or not. So in terms of valuations, the current EPS for FY22, that is the previous year, the FY22 EPS has been 16 rupees. I believe in FY23 the EPS should be around at least 27 rupees. So at around 12-20 rupees or so. It is trading at around 45 times FY23 earnings, which is not ultra expensive. It used to trade at 80-90 times, even 100 times. Currently trading at 45 times. In FY24, I believe the momentum will be even better. So I believe that the EPS in FY24 will be closer to 45 rupees. So we could see the stock trade at around a PE of 65-70. I have taken an average PE of what the company has done over the last 2-3 years, so that's around 65-70. And in that regard, the stock could go as high as 3,000 rupees, I believe, by the end of 2024. So that's in 2 years time. I see the stock even scaling up to 3,000 rupees. Hence it looks extremely attractive at 1200, 1220, 1230 rupees. One can definitely look to accumulate here if they have not got into FL. So in my opinion, what needs to be done is those who hold at lower levels should continue to hold. Those who have bought at higher levels can average here. I believe 1150, 1170 should be very strong support. So around 1200, 1220, if you get at these levels, what it is quoting at the moment, one can definitely accumulate the stock. It is a very good 2 year pick. In fact, in my opinion, it should do well over the next 3 years till 2025. But allocate less than 10% of your total holding and invest long term, maybe 7% or so maximum. And I think it is best to buy in market stress, and currently it is the same situation. Currently there is a lot of pandemonium, a lot of, you can say, fear in the market, and these are the kind of stocks that needs to be picked up on such discounts. The stock has come down from 1500 all the way to 1200, 1230, 1240. So these are decent levels to accumulate the stock from a 2 years perspective. So this was a video on FL. Please like and subscribe my channel and hit the bell icon so you get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.